Started. My name is Jason Derbyshire. I'm the Director of Education here at TradeLog Software. And today we're going to be talking about IRA wash sales and the painful results. So hopefully most of you who are with us today have seen some of our previous events about wash sales, or you're familiar with some of the basics about wash sales. Because this is not an introductory session on wash sales, we're going to specifically be talking about IRA wash sales and how an IRA trade can trigger wash sales that have really painful consequences. As we get started, just a reminder that the information we're presenting today is for educational and informational purposes and should not be construed as financial, tax, or legal advice. So you'll want to consult your tax advisor and discuss your specific situation, because ultimately you are responsible for your investment and tax reporting decisions. So particularly later when we talk about some of the strategies that apply to various active traders, some of those strategies may work for you, some of them may not. So we're not going to give you any blanket strategies here or tax rules in essence that you need to follow with your trading. So that's something that I want to point out as a reminder, and we'll discuss a little more of those when we get to the strategies, and I'll highlight some of the pros and cons that are involved with that. Okay, so now, again, my name is Jason Derbyshire, and I'm here at TradeLog Software. We've been producing IRS-ready tax reporting since 1999, and later I'll show you some of the features of our website if you're not familiar with the resources available at TradeLogSoftware.com, but you can learn more about wash sales and IRA wash sales on our website. So when we talk about IRA wash sales, it's important to realize that IRA trades can trigger wash sales, and there can be some bad results. So today we're going to explain what IRA wash sales are and how they work, and we're also going to show strategies that can potentially help you avoid the harsh consequences of those IRA wash sales. And through that, I'm also going to show you how you can use TradeLog software, if you're a TradeLog user, some of the reports that can help you when it comes to monitoring and understanding IRA wash sales and taking control of those. So as I mentioned, this is not an introduction to wash sales. So hopefully you understand some of the basic concepts of what is involved in the IRS Wash Sale Rule and what a wash sale is. But today what we want to focus on particularly is how wash sales are involved with an IRA. And when we're looking at the IRS regulations, here you see an excerpt from publication 550, page 58. The IRS regulations state that a wash sale occurs if you acquire a qualified position in an IRA within 30 days of a loss that occurs in your taxable account. So you'll notice we highlight point number 4 there in publication 550, where they specifically state if you acquire substantially identical stock in your IRA or Roth IRA. So the wash sale rules apply when the acquisition occurs in the IRA account. Now, what's interesting with this aspect of the wash sale rule, in all wash sales, the loss cannot be deducted at the time that it occurred. So if you have a loss and it's part of a wash sale, you have to make an adjustment, and that loss can't be taken at the time it occurred. Now, in a normal wash sale situation, the amount of the loss is disallowed, but it's added to the cost basis of the trade that triggered the wash sale. So the shares or contracts that were purchased, often referred to as replacement position. So that's in a normal wash sale situation, the adjustment is made. However, you'll notice in the bottom paragraph that's highlighted here in publication 550, the IRS says if your loss was disallowed because of the wash sale rules, add the disallowed loss to the cost of the new stock or securities, except in number 4 above. So when there's an IRA wash sale, when you acquire those shares or contracts in the IRA, that adjustment where you add the disallowed loss to the cost basis is not made. So this is an exception And it's this exception that can make IRA wash sales particularly painful. Now, it's kind of challenging to understand this in simple words, when we're looking at a paragraph of text. And so what I find best is to kind of look at an example. And so let's first look at just a basic typical wash sale. Say that on December 10th, you sold 100 shares of stock and you had a loss of $1,000 total. The next day, on December 11th, you bought 100 shares of that same stock for $500. That's your cost basis. And this is in a taxable account. This triggers a wash sale because within 30 days of that loss, you acquired new shares of that security, new shares or contracts. And so you're not allowed to deduct the $1,000 on December 10th, and instead the cost basis is adjusted for those shares purchased on December 11th. The cost basis would now be $1,500. So we add the $1,000 loss into the cost basis, and that creates that $1,500 adjusted cost basis. So this is a normal wash sale in a taxable account. These adjustments happen all the time. But what's different is if we change one of the variables here. Let's say that on December 10th you sold 100 shares in your taxable account for a loss of $1,000. On December 11th you buy 100 shares, but in this scenario you buy the 100 shares in your non-taxable, your IRA account. The IRS says that this triggers a wash sale because within 30 days of the loss on December 10th, you acquired new shares or contracts on that security. So you have a wash sale, but it's an IRA wash sale because the acquisition occurs in the non-taxable, the IRA account. So in this scenario, the IRS, of course, says you're not allowed to deduct the $1,000 loss on December 10th, so we strike that. But you don't make an adjustment to the basis for the shares that were bought on December 11th because they're in an IRA. So they're not adjusted. The cost basis of those replacement shares is still $500. So what happened to that $1,000 loss? Well, essentially, it's gone. It's permanently disallowed. And this is why we say that the IRS rules for wash sales in an IRA account are very painful. They always have harsh consequences because they permanently disallow the loss. You're not going to capture this $1,000 loss later when you sell those replacement shares. It's gone. And so this can be a real problem. How does this affect you? Well, just to kind of recap, in a normal wash sale, you can defer the disallowed loss. So you defer it, and it's now included in the cost basis of the replacement position. When you finally close those shares, that replacement position, essentially you take the loss at that time, as long as you don't create a new wash sale, of course. But with an IRA wash sale, the loss is disallowed completely. There's no cost basis adjustment. The loss is absolutely non-deductible. And so that's why it has a very painful consequence. Particularly, the reality is you may have losses in your taxable account, but because of the IRA wash sale, you're not able to claim all of those losses. Some of them can be permanently disallowed. And what can be even worse is you may have to pay taxes on capital gains that you do not have. We give a little example here. Say that in 2014 you have a net loss of $3,500. So that's how much you've actually lost in the 2014 tax year. However, because of the IRA wash sale rule, you cannot deduct $4,500 in losses. So you have $4,500 in IRA wash sales that were permanently disallowed. So that takes us from having a net loss of $3,500 to now having a gain of $1,000 because you can't take $4,500 in losses. So now you'd have to pay taxes on a $1,000 gain, even though your net gains and losses was a loss. You netted a loss of $3,500 for the tax year. So you could see where permanently disallowing those losses can really hurt you, especially if they bump you up into the capital gains. But the reality is no one really wants to permanently disallow losses. If anything, you'd like to be able to carry those over to the next year, even if you reach your your cap on your losses that you can take. So there can be some real consequences from the IRA wash sales in your account if you're not aware of what's going on. Now, at this point, I'd like to answer some questions that we commonly have come up. Number one, if I have a loss in my IRA and I buy back the security in a taxable account, is that a wash sale? And the answer is no. The IRA wash sale is a one-sided wash sale. You have a loss in your taxable account and you acquire a replacement position in your IRA or your non-taxable account. That's an IRA wash sale. If you have a loss that occurs in your IRA account, then it doesn't matter whether you purchase more shares in the IRA, whether you purchase shares in your taxable. The IRS could care less. The loss occurred in the IRA, they don't care. We're talking about losses that occur in your taxable account and you acquire new securities in your IRA. That's an IRA wash sale. Now, the second question is if you use mark-to-market accounting. If you've elected Section 475, then you have mark-to-market accounting. Do IRA wash sale rules apply? The answer is no, because traders who have elected MTM do not report wash sales on their MTM accounts. You're exempted from the wash sale rule if your account is MTM. The same would apply if you're trading Section 1256 contracts. And I think Doug had a question about that, and Melina's actually already sent an answer to you, Doug, but I'll just expound on it for everyone. Doug had asked, what about if you have options on QQQ? So any index options or futures or what we call Section 1256 contracts, if it qualifies and is treated as a Section 1256 contract, then the wash sale rule does not apply because those automatically come under the rules for mark-to-market accounting. So to learn more about that, you can check out on our website. We have some resources about Section 1256 contracts. Okay, so now let's talk about some other questions that often come up. When we talk about the IRA wash sale rules, these are some questions that come up about reporting. The first question, many people will ask, well, if my IRA trades are not reported on my tax return, so how do I report the wash sales? Well, what happens is when you complete Form 8949, which is used with your Schedule D, the wash sale adjustments are reported on Form 8949. So when the loss occurs on the 8949, it's disallowed and adjusted. However, there's no subsequent adjustment to cost basis. It's just permanently disallowed. So that's how you report the IRA wash sale on the 8949. Just like you would any other wash sale, except there's no adjustment to cost basis for the replacement shares. Now, many people often ask too, does my broker report this information? And the answer is no, for a couple of reasons. Number one, brokers do not provide the 1099-B for IRA accounts. They don't provide that to you, and they don't provide it to the IRS. Also, brokers are not required to adjust for IRA wash sales in your taxable accounts. So you are required to do this, but the broker is not. They only have to adjust the wash sales that occur within the same account and for identical QSIBs. So that begs the question, how does the IRS know if you've adjusted for IRA wash sales? Because the IRS isn't getting a report of your IRA trades. They're not getting a 1099 from your broker, so how do they know? Well, really there's no way for them to know unless they audit you. If you are audited, though, you may be asked to provide records for all of your accounts, including your IRA accounts, and then they'll check your work. And as we showed you in Publication 550, the regulations state that you're not allowed to claim that loss if there was an IRA wash sale. So they're going to expect that you followed those regulations. And there have been some revenue rulings from the IRS that have clarified this, and they have enforced these rules on various traders in recent years. We've actually seen more of this in recent years, even though some of these rules really aren't anything new. The wash sale rules have been around for quite some time, but there's been some clarification and the IRS has decided to enforce this on IRA accounts. Now, some people asked, we had a question just the other day from someone about the legality. Would the IRA wash sale regulation stand up in court? We're not here to discuss that. If you want to challenge it in court, you're more than welcome to. Get a good tax attorney and have at it. The fact is, it's in the regulations and it has been enforced in recent years, and so that's why we here at TradeLog have given more attention to this, because many of our clients have been concerned about it and want to make sure that they're reporting accurately. So then the last question, since your broker does not report any of this, do you need to report these wash sales to the IRS? And the answer is yes, because you are required to report all wash sales, no matter what your broker has reported. If you've joined us on some of our previous webinars talking about wash sales, we've shown you some of the instructions that are sometimes easily overlooked, but for filling out Form 8949 for Schedule D, they point you to Publication 550, where it says that you are responsible as a taxpayer for adjusting any additional wash sales that your broker does not report. So even if it's not on the 1099, you are responsible for making those adjustments if necessary. So we've kind of gotten a little picture of what IRA wash sales are and how they affect you when it comes to disallowing the losses. But I want to take a few minutes now to talk about strategies with IRA wash sales and some strategies that it may work for you to help avoid the painful results that can occur. So first of all, some traders may choose to avoid any and all IRA wash sales. And if that's the stance you want to take, you say, I want to completely avoid these, here's a couple of strategies that might work for you. Number one, the easiest and most obvious is to not trade the same security, or keep in mind options on the same security in both a taxable and IRA account. So keep in mind, as we've talked about in our other webinars about wash sales, that's not just the stock, but if you're trading options on the same stock, those also may trigger wash sales. So if you want to completely avoid an IRA wash sale, then that's one way to do it, is to not trade the same security in both a taxable and an IRA account. Alternatively, if you wait 31 days after your last trade before you switch over to the other account and do trading for that security, you can do that as well. The key is, during the wash sale window, you would not want to be trading the same security in both taxable and IRA accounts. That is a simple way to avoid the risk of having any IRA wash sales, because there's no overlap, there's no reason that the IRA purchase or acquisition would trigger a wash sale from your taxable account. So that's one way to do this. But again, this isn't a rule that you have to follow, because I know many traders who are actively trading in both a taxable and a non-taxable account and trading the same securities or options. As I've said in other webinars we've had, the most important thing as a trader is to focus on being profitable, because if you don't have losses, then you don't have to worry about wash sales. So if you're focusing on being a profitable trader and you're able to do well at trading the same security in both taxable and non-taxable accounts, that's great. And you need to do what's best for you and what's most profitable. So we can talk next about a few strategies. If you are someone who trades the same security in both taxable and IRA accounts, there's some tricks you can do as well to avoid an IRA wash sale. First of all, if you have a loss that occurs in your taxable account, say that you had a large loss that occurs today, if you don't open a trade in your IRA within 30 days, then that can prevent you from having an IRA wash sale. So say that I'm trading, I'm just going to pick a ticker, say I'm trading Apple, and today I took a big loss on Apple. I realized that. Well, now, knowing that information, I may choose to not acquire any shares or contracts on Apple in my IRA for the next 30 days. That way, I don't have any risk of permanently disallowing the loss that occurred today. So that's a strategy that I've seen some guys use because, again, you're going to focus on trying to be a profitable trader. Losses are going to occur. If you do have a sizable loss, take note of it and make decisions accordingly. Now, the second bullet point here, sometimes keep in mind the wash sale rule is back 30 days and forward 30 days. So if I have a loss that occurs today and I already acquired shares in my IRA within the last 30 days, then I may have a problem. So another strategy can be if you do look at a trade, maybe I'm thinking of selling some shares or closing some contracts today and it's going to result in a loss, and I look in my IRA and I see that I acquired shares or contracts in the last 30 days, then I may have to make a decision. Do I really want to close this position today and have the risk of the IRA wash sale? That's something that you can decide, and you may say, I'm not going to close this out because I'm going to have an IRA wash sale. So that's a strategy as well. A little more difficult because, again, if you've had a trade that if you acquired shares in the last 30 days, you can't go back in time and undo that. So you may have already acquired a position in the IRA. Now keep in mind, again, when we talk about the same security, that also can include options on that security. And be careful too, because we're talking about this at a very high level, and there can be a lot of complex details with wash sales. If you have multiple accounts involved, you may need to be aware that you might have a trade that closes today and it's a profitable trade, but connected to that are previous wash sales. Well, now there's a loss, and so the wash sale rule can get very complex, and we'll talk in a moment about how you can use some of the reports in TradeLog to maybe help you get a better picture of what's going on with wash sales in your account. But let's say that you do have an IRA wash sale that occurs in your account. There's also some strategies, or a strategy, that can allow you to possibly salvage that loss, but it is time sensitive. Let's say that I have a loss that occurs today, let's say I have a loss that occurred today, and I also acquired shares within 30 days in my IRA account, and so I have an IRA wash sale. Can I turn that around? Can I somehow create a situation where I can now defer that loss? And you can't. First of all, I have to be within 30 days of the loss. So if the loss occurs in my taxable account today, the wash sale window is still open for 30 more days. So within that 30 days, if I create another wash sale position by opening a qualified position but in my taxable account, then what can happen is I can defer that wash sale adjustment. Instead of going to the IRA, there's now the option to adjust it instead to the taxable account, to the taxable trade. So in essence, there's two potential trades to adjust the wash sale to, and by adjusting to the taxable trade, we simply defer the loss rather than permanently disallowing the loss. Now, again, it's probably easier if we take a look at this more visually. So let's take just a basic example. Say that on December 1st, you sold 100 shares at a loss of $500. On December 2nd, you purchase 100 shares in your IRA account. This triggers an IRA wash sale. As it stands right now, the $500 loss would be permanently disallowed because of the IRA wash sale and the rules. How can we salvage that loss? Well, let's say that within 30 days of that sale on December 1st, you purchase 100 shares, but this time you purchase these 100 shares in your taxable account. Notice now that there are two purchases, two situations where you acquired shares, both for 100 shares. Now, really either one of those can be a wash sale. Well, if we adjust the wash sale to the taxable account, what that allows you to do is keep that $500 loss. You simply defer it until you finally sell those shares that were purchased on December 12th. And in essence, we're able to avoid an IRA wash sale situation. So this is a strategy that you can use, and this is something the way TradeLog is set up. When TradeLog is making wash sale adjustments, we look, and if at all possible, we try to keep the wash sale adjustment within your taxable accounts. We only adjust to the IRA if there are no other options available. So that's why in the top part of this example, if there wasn't another purchase, the only purchase was in the IRA, TradeLog would have to make that IRA wash sale adjustment. But as soon as there is another option, there's an option in the taxable account, TradeLog is going to put that into the taxable account. That way we can defer it. So this is a strategy that might help you if you do have an IRA wash sale that occurs. Or if we go back when I was talking a moment ago, say that you took a huge loss today on a security, and you realized that you had purchased shares or contracts in your IRA within the last 30 days. So right now, as it may stand, you may have an IRA wash sale. Well, you took the loss, but maybe you had to. Maybe the contract expired or whatever. But you may be able to salvage that by creating a position, acquiring shares or contracts that will trigger a wash sale in the taxable account. So this is something that's good to be aware of. And what I want to talk about next, because this is a nice segue into TradeLog, and how TradeLog can help you in determining these things. But before I do, I want to mention something important. When we're looking at this situation that I just gave, this example, notice we're dealing in a very easy, even amounts, 100 shares. 100 shares were sold, 100 shares were purchased. But keep in mind that when it comes to the wash sale rule, there can be unequal shares. And most of us, we don't trade in the same even increments. So you may be buying 50 shares, selling 25 shares, buying another 100, etc. So the wash sale rule takes all of that into consideration. Let's say in this example, if I had a sale of 100 shares in my taxable account, but I purchased 50 shares in my IRA and I purchased 50 shares in my taxable account, well, those 50 add up to 100. So 50 shares is going to trigger an IRA wash sale. 50 is going to trigger a wash sale in my taxable account. So just keep in mind that you have to make sure if you're trying this this strategy, you have to consider the number of shares, because if there are rules that involve equal amounts of shares. So that's important to take into consideration. And we have some more examples. Actually online we have a blog article that gives some examples to help kind of explain this a little bit. And you can always ask our support team if you do find you have a wash sale situation that you're in, an IRA wash sale occurs and you're not sure what do you need to do to avoid it, to apply this strategy, you can always ask us and we can help you to see what the reporting is showing. And so that's what I want to show you now, is talk a little bit about how TradeLog can help you when it comes to IRA wash sales. First of all, in using TradeLog, you can use TradeLog to track your trade history in all of your accounts, including your IRA accounts. And that's very important. I'm going to switch over to TradeLog right now. Let me pull it up on the right window here. There we go. So here I have a TradeLog account open, or TradeLog file open, and this is just a simple demonstration file. You'll notice I have two account tabs set up. One is a taxable account, one is an IRA account. And in the account settings, you'll notice we have the options for account type. So you have cash basis, you have IRA or non-taxable, and then if you have the mark-to-market version of TradeLog, you can set up an account as MTM. So if you've elected mark-to-market. So those are the options. So you can set up your taxable accounts as well as your IRA accounts in TradeLog. Import all of your IRA trade history. This is especially important because if you are trading actively in your IRA. Some of you might have an IRA account and you really don't have a lot of activity. Maybe you've got just some long-term investments and it might not be a big concern. But more and more we see, I've seen a lot of guys who are trading in their IRA accounts and doing very well in it. And so again, there's nothing wrong with that. But if you are trading in your IRA account and there's a concern about IRA wash sales, you definitely want to import those into TradeLog so that you're able to look at your complete trade history. Keep in mind in TradeLog, if you're a TradeLog user, that you always want to run your wash sale reporting from the All Accounts tab. This will allow TradeLog to adjust wash sales across all accounts, including your IRA accounts if necessary. Okay, so now I'm going to switch back over to our presentation for a moment here. And the other thing we can use TradeLog is when it comes to reporting, TradeLog is going to adjust for any IRA wash sales, and it's going to report these on Form 8949. Now, if you do have any permanently disallowed IRA wash sales, these are going to be reported in TradeLog, and you're going to find that specifically on the wash sale detail report. So let me show you here in TradeLog. Now this is a 2014 tax year file, but we can run the Form 8949 year to date. It's just going to give me a warning that this is only available in a draft because I haven't closed out the tax year yet. But when I run the Form 8949, it's only reporting here the taxable gains and losses. So it's not reporting the trade history from my IRA accounts, even though I'm keeping track of those in TradeLog. But wash sale adjustments, if they do occur, an IRA wash sale occurs, it shows up just like any other wash sale adjustment. There's a W in column F, and in column G it has the amount which has been disallowed. As I said earlier, the only difference is there's no adjustment to the cost basis in column E. So TradeLog makes all of those adjustments if there's an IRA wash sale, and at the bottom of the 8949 report window here, it might be hard for you to see because of the size of the print, but you'll notice it has wash sale loss to IRA. So here on the summary on the bottom of this window, we give you a summary, a snapshot of your taxable gains and losses. And you'll notice in this demonstration file I have, there's $59,000 in losses that are permanently disallowed to the IRA. And so it gives a summary there. Now, if you want to see more details about those losses, what you can do is we'll close out of this, and we're going to go over to the Reports menu and run the Wash Sale Details report. Now, the Wash Sale Details report is going to show any wash sales that are affecting my bottom line at year end. Particularly in this case, you notice there are wash sales permanently lost to IRA accounts. That's the biggie that I have in this particular demonstration file. So what it does is the report lists a summary by the ticker, by the security. So you'll notice I have Apple, I have some Apple contracts. Now, these are all of the tickers that have losses permanently disallowed to the IRA account because I purchased these shares or contracts in my IRA. Now that's the first page here, the summary, and you'll see it gives us a total. Then after that I can go and I can see the details. So I can actually go in and I can see all of the details of the trades, and you'll notice if a trade was acquired in the IRA, there's a -IRA. So we indicate it's an IRA trade on this particular report. This is one of the few reports that you're going to see that shows wash sales, and shows the IRA trades, the actual IRA trades, because in your tax reports we're not going to show the IRA trades. We're just going to show the adjustments. So this report allows you to go in and see where you actually acquired securities in the IRA account that triggered an IRA wash sale. So you can see this. Now most of this report, usually this is an after the fact report. So it's going to show you what has happened, and it may or may not help you in making decisions when we talk about those strategies. If you're looking at something and it occurred within the last 30 days, you may be able to take action in order to change that. One of the tools that we have in TradeLog that helps with that is the potential wash sale report, and that's what I want to show you next. The potential wash sale report, if I go back to, I'm in the All Accounts tab here, I go to the Reports menu and run Potential Wash Sales. This report tries to give you a snapshot of your account, what's going on right now. First of all, it's going to show any wash sales attached to open positions. So if you joined me in our webinar a couple weeks ago, we talked about positions that are open in December, particularly at year end. This section will kind of help you decide on what positions you may need to close out. But what I want to particularly highlight for you, the sections that may help you when you're dealing with IRA wash sales. Section number 2 is going to list losses that may be disallowed by new trades. So in this section, what we do is TradeLog looks for any losses that have occurred in the last 30 days that have not already been adjusted as a wash sale. So according to this section, you'll notice, for example, Amazon. I had 100 shares that were sold on December 2nd at a loss. So if I purchase, actually this was a short sale that was closed, so if I have another short sale position or another qualified position that could trigger a wash sale on Amazon before January 1st, I may trigger a wash sale, and this loss amount of $160 may be disallowed. That's both in my taxable and in my IRA. So if I open shares of Amazon in my IRA account before January 1st, then right now I could potentially have an IRA wash sale. So this is a section that can help you to see where those losses have occurred, and particularly if you had a very large loss. I have a couple here that are several $1,000s. So I might want to monitor those, and I may say, you know what, I can't afford to lose these losses, and so I need to avoid purchasing or opening positions in my IRA until this 30-day window is up. So this section can help you see what losses have already occurred and know which securities you may need to avoid for the rest of the wash sale window. Now, the last part of this report, section 3, is wash sales lost to IRA accounts. So this section is going to show any wash sale adjustments, any IRA wash sale adjustments that have occurred, but only those that are in the last 30 days. So it's going to look at today's date, and it's going to go back 30 days. Because remember, you have 30 days from when the loss occurred in your taxable account in order to try to salvage that IRA wash sale. So you'll notice here that I had 400 shares of BHI that had losses on November 19th. And right now, if I don't do anything else in my account, these are going to become IRA wash sales because I acquired shares or contracts in my IRA. So I have until December 19th to do something to avoid that. So what I may choose to do is I may choose to buy shares of BHI. I have tomorrow as the end of this period. So tomorrow I may buy shares of BHI, or I might open contracts that would trigger a wash sale. And that way I can adjust the wash sale to my taxable accounts instead of permanently disallowing this to my IRA. So this section of the report can be helpful in seeing those IRA wash sales that have already occurred, but just within the last 30 days, and that you may be able to do something about. Now, you'll notice on this report there's some blue links to click for additional information. If you click on those, it'll take you to our user guide. In our user guide, we explain even more about this report and these sections to help you understand what is being reported and how you can use that information. Because what's important, you see this in all of our discussions about wash sales, what's important is being aware, understanding how wash sales are affecting you, and then making informed decisions about your trading. And that's what we try to do with TradeLog, is provide the information, the reporting that you need. Now, wash sales can be very complex. Sometimes there can be some really complex situations if you have multiple accounts, if you have stocks and options, you have unequal numbers of shares and contracts. And so you want to be aware of these various factors, try to monitor your wash sales. But I'll say this, like I've said it in some of the other discussions about wash sales, it's best to not become so overly consumed about avoiding wash sales that you lose focus on why you're trading in the first place, which is hopefully to be a profitable trader. And so understand wash sales, know when they can affect you, but trade in order to make profits. That's what's most important. Otherwise, you're going to become so consumed by wash sales that you're going to lose focus on other key metrics and things that can help you be a profitable trader, and then it's just going to be a bad thing all around. Okay, so we talked here about the potential wash sale report. So I just showed you that. The potential wash sale report, again, just to recap, helps you understand any IRA wash sales that you can possibly avoid using the strategies we discussed. And it also helps you know which securities you have had losses on in the last 30 days. So you might be able to avoid wash sales that way. So kind of a summary here. We talk about IRA wash sales and how they can be potentially painful. Keep in mind, when an IRA wash sale occurs, the loss is permanently disallowed. And so that's why that rule is painful. You can avoid IRA wash sales by not trading the same security or options in both your taxable and IRA accounts. But you can also avoid the IRA wash sales by monitoring. We said IRS wash sales. That's a little typo. Point number 3, you can avoid IRA wash sales by monitoring your wash sale activity and taking appropriate action when needed. So if you are trading the same security or options on the same security in both your taxable and your non-taxable accounts, it's definitely good that you be on top of the reporting, that you understand where you stand with wash sales, how they're affecting you, particularly any risks that you have for IRA wash sales, and then you act accordingly. I know some traders who use TradeLog every day. Every morning they import the previous day's trade activity, they take a look at where they stand, they run the potential wash sale report. So that way they understand if there's anything that could be potentially hazardous, they can take appropriate action before it's too late. But if you wait until February and you're going to file your taxes, it's usually too late, long gone, especially with IRA wash sales. It's usually past the point where you can do anything about it. And so, of course, TradeLog can help you monitor IRA wash sales, and we provide the IRS ready reporting. So if you get your 1099 from your broker, remember they haven't adjusted for all the wash sales, especially not IRA wash sales. So you'll need to use a tool like TradeLog to help you provide or help you create the IRS ready reporting based on the rules for taxpayers. Okay, so this kind of brings us to the end of our presentation. Just to recap some of the resources available for traders at our website at TradeLogSoftware.com. You can read our guides to trader tax topics. You can check out the TradeLog blog. We have some past articles about IRA wash sales, and we'll have some more in the future. And of course, you can learn more about TradeLog and the features of the software and how it can help you generate your trader tax reporting. I'm going to go over right now and just show you here on our website under our resources. If you go to the IRS Wash Sale Rule, this is the definitive guide to wash sales and the wash sale rule, and you'll notice we have a section here on wash sale rules for IRAs, and so we give you some more details just as we discussed today about IRA wash sales and how those are calculated, so you can learn more about wash sales and IRA wash sales there. There's also a great chart that you can find, chart of wash sale triggers, and this helps you understand how TradeLog calculates and adjusts for wash sales, so you can understand what situations, if you had for example, if you bought a call and you sold or closed it at a loss, what kind of positions are going to trigger a wash sale on that call. Well, you can look at this chart. It's a good little reference if you're not sure, and that way you understand how TradeLog is going to make those adjustments. As I mentioned too, you can go to our blog. Up in the top right is the easiest link to our blog, and there you can look under trader taxes, and you can look at some of our past articles, including some articles about IRAs and some of the things you can do to not only tap into your IRAs but also make sure and avoid IRA wash sales. And if you want to learn more about TradeLog software, you can go to the features section, and that's probably the best section to learn more about some of the features of the software. If you're not a TradeLog user, you can get the free trial version. I encourage you to check it out. You can actually load up your own accounts and do everything but generate finalized tax reporting. So you can see where you stand and how wash sales affect you and learn more about some of these reports. Okay, so that kind of brings us to the end now. Just a couple of questions I see that we have. Melina's been answering some of them for me, but have a few that would be good for everyone to understand. When we talk about unequal numbers of shares, David had asked a question about options and stock. If you have a loss, for example, on one contract for a particular option, and you purchase shares of that same underlying stock, if you purchase 100 shares, that's equivalent to one contract. That's the equivalency there. And so if you have a loss on one contract, that's going to go to 100 shares. If you only acquire 50 shares, well, only half of that loss is going to go to the 50 shares if it's a wash sale. So that I hope that helps understand a little bit about when we talk about unequal numbers of shares, and of course contracts, each contract having a multiplier of 100 shares. So that's how that is factored in. Okay, let's see. Let's see, and a couple of questions about when it comes to calculating the wash sales as well. This goes a little bit back to some of the basics of wash sales. When we talk about substantially identical securities, the IRS has never really clarified what substantially identical securities are. But in general, over the years, what's been accepted by the IRS and kind of clarified, usually we're talking about, when it comes to stock, we're talking about stock on the same company. In fact, sometimes different classes of stock for the same company may be considered substantially identical. Sometimes they're not. That just kind of depends on the actual class of stock. But for example, if you have shares of Microsoft and shares of Apple, those are two different companies. They're not considered substantially identical. Now contracts, usually it's contracts on the same underlying securities. What's kind of been accepted. Again, the IRS has never clarified exactly what's a substantially identical contract, but the way TradeLog treats it is if it's a contract for the same underlying security, most trader tax experts agree that it's substantially identical. And so we're going to treat it that way. So if you're dealing with different companies, different tickers, it's probably not going to be a wash sale. Okay, so answer some of those questions. All right, very good. Want to let's try to understand some of the questions here. I wanted to clarify again too for a moment about IRA wash sales. Keep in mind again, an IRA wash sale only occurs if there's a loss in your taxable account and you acquire shares or contracts in your IRA account. That's the only way the IRA wash sale works. Sometimes people get confused and they think they need to be adjusting wash sales within the IRA account. That's not the case. If you have a loss in your IRA, nobody cares except for you. But the IRS doesn't care. There's no need to make wash sale adjustments within the IRA itself. The only time this rule comes into play is if you have a loss in your taxable account and you acquire shares or contracts that would trigger a wash sale in your IRA account. That's the situation that we're talking about. Now keep in mind, if there is another qualified position that you acquire in the taxable account, then you can adjust your wash sale to the taxable account, avoid permanently disallowing it to the IRA. That's a strategy that you can try to use in order to avoid those IRA wash sales. So just wanted to clarify that. Okay, and Susan has a question, just this kind of more general question about TradeLog. If you get the TradeLog software, if you're checking out the free trial version, you can import from your broker. If it's one of our supported brokers, you can import that into TradeLog. You don't have to manually enter your trades. For those of you who are new to TradeLog, if you want to find out more about our supported brokers, you can either under our features, that's probably the easiest way, go into the features menu and click on list of supported brokers, and here you can find a list of all the brokers that we support, and we also tell you the type of import method we have, so you can usually click on that or just click on the name of the broker as well, and you can learn more about how you import from that particular broker. So if you want to look at the instructions, that'll take you to our user guide. For example, here's the instructions for E-Trade. You can see the different options for importing from E-Trade. So you can get to that through the features menu. You can also get to this from the support menu as well in TradeLog. We make sure and make that available both ways. All right, while I'm also here on the website, I want to show you under webinars, which is under the support menu. You can check out our upcoming sessions. We do have another webinar coming up, probably our last one for this year, for 2014. On December 30th, we're going to talk about how to avoid harmful January wash sales. So this is the fourth webinar in our series about wash sales, and we're going to talk about what you need to be aware of in the month of January to prevent deferring losses from the 2014 tax year. So that's going to be 4:30 p.m. Eastern Time on Tuesday, December 30th. So we hope to have you with us again there. You can also find a list of our archived webinars at the bottom of this page and a link to view all the archived webinars. As I mentioned to everyone who registered, and for today's event, you will get an email that'll have a link where you can view the recording as soon as it is available. But if for some reason you're missing that, or you want to check out some of our past events about wash sales, we had a great event, Wash Sales 101 for active traders, watching wash sales in December. Of course, we'll have today's event on IRA wash sales, and then the event on December 30th about January wash sales. So check those out and keep up to date on any other webinars that we'll be having here in the future. So again, I wanted to thank everyone for joining us today. We've had a great event and hope everyone has a good evening, and we'll look forward to seeing you next time.